Hello and welcome to ICA in Conversation that broadcasts on the second and fourth Wednesdays of each month, focusing on current issues and challenges in the context of compliance and counter-financial crime. I'm Tim Tyler, and coming up, we're going to consider how the legal and accountancy sectors are responding to increasing regulatory attention and some of the particular challenges this presents. To do this, I'm delighted to be joined by Dr. Katie Benson. Katie is Senior Lecturer in Criminology at the University of Manchester and the author of Lawyers and the Proceeds of Crime. Katie, welcome, and thank you so much for joining me for this conversation.
Thank you for having me, Tim. Lovely to be here.
So, as ever, we would love to hear from you wherever you are in the world, and sometimes it's interesting to hear where you're joining from by perhaps adding some words in the comments section for the event on LinkedIn. But perhaps even more importantly, any questions or challenges or observations that you'd like to make. I'll try and keep my eye on those comments, and where possible, I'll incorporate those into the discussion that we're having, particularly during the last 10 minutes. So, Katie, we spoke before joining this particular event about the changes facing the legal and accountancy sectors. Can I start by asking, are we seeing a shift in how legal and accountancy firms are being supervised, in particular for AML and CTF compliance?
Thanks, Tim. Yes, I would say so. We've seen a definite evolution of AML, CTF supervision for the legal and accountancy sectors and other so-called gatekeeper sectors, particularly over the last 8 to 9 years or so in the UK. And then obviously we have a significant change on the horizon in the UK with the announcement last year that AML supervision for legal service providers, accountancy service providers and trust and company service providers is due to be transferred away from the current professional body supervisors to the Financial Conduct Authority. We're also seeing significant changes in other parts of the world. For example, in Australia, after many years of debate, gatekeeper professions, including lawyers and accountants, will be brought into the AML CTF regime from the end of July, I think. And another shift that we've seen in recent years is a kind of a broadening out of what the AML regulatory regime encompasses for lawyers and accountants. So taking in wider illicit finance or AML adjacent issues, and so in effect expanding the gatekeeper role. So yeah, I can talk more about some of that evolution if that's okay.
Yeah, it would be good to do that. And can I say that that's certainly reflected in my experience. Financial services have been under the microscope for decades now and have arguably stepped up to the plate. And we're seeing very significant change culturally in terms of policy, practice, procedures, controls across financial services and banks in particular. There is perhaps a perception, and I'm going to choose my words carefully because I know that this can generate a strong response, but there is a perception that other areas of regulated activity, particularly the accountancy and legal sectors, are lagging behind in that. Is that a fair observation to make? What are your thoughts, Katie?
Well, I mean, legal and accountancy professionals, trust and company service providers, estate agents, etc., were formally brought into the AML regime in the UK with the 2003 money laundering regulations. So, and have definitely, been on a bit of a journey since then. There are currently, as you probably know, 13 AML supervisors for the accountancy profession and 9 for the legal sector. And there's long been concern about those numbers and about inconsistency between supervisors. But, you know, for example, in the legal profession, there are different supervisors for solicitors and barristers in England and Wales, Scotland and Northern Ireland. So that gives you 6 of the 9, and the other 3 are smaller supervisors focused on specific parts of the profession. So there is some logic in having jurisdiction specific and specialism specific supervisors. For the accountancy sectors, obviously the supervisor are the various professional bodies. So there has been concern about this, and that's why part of why we're seeing that the changes that we're seeing. But I would say in the legal sector, at least, and to apologise, most of my research has been on the illegal sector, so I'll try not to focus too much on that and things cross over. There has been a much greater focus on AML supervision since the 2017 money laundering regulations and the introduction of OPBAS, which supervises the supervisors in 2018. So, for example, we've seen the introduction of an AML focused team or function within the SRA, the Solicited Regulation Authority, which is the supervisor for solicitors in England and Wales, as well as in some of the other legal sector regulators. And that's continued to grow and to increase its proactive supervision and investigation activity, as well as its engagement work. And so we've also seen a notable increase in regulatory enforcement activity over the last few years by the SRA particularly. I'm currently doing a project looking at the SRA's enforcement activity over the last few years. So, and we see some interesting developments there in relation to the number of, you know, a notable increase in the number of proactive anti-money laundering engagements that the SRA has had with firms. So this would be desk-based reviews, on-site inspections, AML engagement as part of kind of wider investigations or audits. So we've seen much more kind of proactive activity by the SRA as an example. And this has led to an increase in investigations, which happen when non-compliance is identified through these reviews, these inspections. And the figures, I mean, the figures don't look great in terms of compliance. In the last kind of full year, we have the 2024, 2025 year, only about 13% of firms that were inspected were found to be fully compliant with the money laundering regulations. About a third of inspected firms were found to be not compliant, and the rest kind of partially compliant. And obviously, it's important to remember that this is percentages of inspected firms. So we can't say that a third of all firms were non-compliant, but a third of those inspected were. And we're seeing definitely an increase in regulatory enforcement outcomes and sanctions on the back of that increased activity, either directly from the SRA or via prosecution at the Solicitors Disciplinary Tribunal. And, you know, many of the enforcement actions, many of the sanctions that we see are for the same kind of issues, you know, a combination of failures to have a firm-wide risk assessment or to have a satisfactory one, or saying they had one when they didn't, failure to have client and matter risk assessments, failure to have appropriate policies, procedures and controls in place, failure to have appropriate staff training in place. So the kind of things that the SRA are required to look for as an AML supervisor, you know, the things that firms are obliged to do under the money laundering regs. So we're seeing, you know, we see those within the enforcement action, as well also actually as, and perhaps increasingly, issues around source of wealth and source of funds checks and things related to that, which I think are slightly more complicated issues.
So we can track over the last 10 years, or perhaps a little more, that there's been legal change and a change of emphasis. Australia, perhaps the most recent, who've one of the last countries to acknowledge that what we call DNFPBs, designated non-financial businesses and professions, and in particular accountancy and legal sectors, will form part of the regulated sector. So there's that we're seeing. We're also seeing within the UK, a change in terms of the way in which the sectors are supervised. And I think from what I've seen, that's replicated across much of the world. In other countries, there is increasing scrutiny and attention being paid to these sectors. But we're also starting to see increased levels of enforcement, and in particular, fines being raised. And you gave some examples of the drivers, the reasons for those. Risk assessments so often comes up. When I was head of anti-money laundering for the Gambling Commission, this was so often the starting point where businesses struggled to even have a risk assessment to define the risks they were exposed to, and in simple terms, the way in which they responded to them. So I think that's really helpful to set the scene. I'm going to actually do something a little different now. I'd like to just share with you something that I've seen in the past, which I think speaks to a very different mindset within the legal and accountancy sectors. And I'm very interested to hear your thoughts, and indeed anyone who's joining us from around the world. And just pausing there for a moment, it's lovely to see Baha joining us from Tunisia, Nigel from Barbados, Vince in Singapore, and Kirk in Chicago, Alison in Malta, Mobalaji, and forgive me if I've not done your name credit, but joining us from Northern Ireland and others, of course. So thank you for sharing that and for joining us. But let me just briefly share an anecdote, Kate, and I'm really interested to hear your thoughts. So when I've delivered training, as I've delivered over the last 10 years, typically to diploma students, one of the exercises I do is focused on suspicion. And what I'll do is challenge the learners around what do we mean by suspicion. And I do an exercise to try and illustrate the fact that it is quite a subjective construct. It's not an objective thing. Actually, we bring our own experience and values and thoughts to defining it. And so I take people through a little scenario where I ask them to imagine that they're behind a counter in a bank, and a customer walks in. It's a very hot day. The customer is 18 years old, boy, acting very furtively. They're wearing a hoodie. The hood is up in spite of the fact it's being a hot day. I ask, are you suspicious? Some people are, some people aren't. Then this individual produces a roll of notes, a large amount of the local currency, maybe typically $7,000, 8,000, and asked to pay those notes into the bank account they just opened. Are you suspicious? Some people are, some people aren't. Now we see that those notes smell of cannabis. And given that they smell of cannabis, does that change your perception? Are you suspicious or not? And then eventually I'll say, and before that individual walked into the branch, you happened to look up and you noticed that they were speaking to someone outside of the branch, and an exchange took place. You didn't really pay attention because they hadn't yet walked into the branch, but you noticed and you remembered that the pocket that the notes came from was the same pocket that the hand went to when they were going through this exchange outside. So that's the scenario. Now, the reason I mention this is because I'll ask people at different stages, are you suspicious? And what I typically find is that quite a large number will be suspicious quite early on, and then that will grow and grow. And by the time we get to the end, everyone is suspicious, with the exception of, and it tends to be, a handful of solicitors and accountants. And I'll challenge them to say, okay, you're not suspicious at all. And they'll say, typically, well, show me the offence. I can't see it. What are you asking me to make a judgment on? This is all just speculation. So what I've seen, and this really is the crux of the issue, that there is a difference in mindset very often. Is that something that you'd recognize? Is that something that surprises you? What are your thoughts, Katie?
I mean, I suppose there's a couple of issues there. I guess it's kind of understandable to think, and perhaps coming from a legal background, to have that perspective
Yes.
of where of wanting to know where a criminal offence has actually happened. And I think when we talk about money laundering, we're talking about the proceeds of crime, and somebody walking into a bank with a load of cash, and you've seen them kind of dealing drugs outside previously, you can kind of clearly say that that's the proceeds of crime. So you would expect as a cashier or someone in that position dealing with that money, that you would have suspicions of that money. That seems quite obvious. I guess one of the complications is that it's not always that obvious to see the proceeds of crime, and it's not always that clear cut
Yes.
to make that kind of assessment. And I think banks, even for banks, I guess, the kind of the using cash and things like that is a kind of an obvious red flag, and things are very much different. But I think for lawyers and accountants, the facilitation of money laundering, or illicit finance, or financial crime more broadly, kind of occurs in different ways. In a way, it's about the services provided more really than about about actual illicit funds flowing through the sectors. So it's in many cases the problem is with normal transactions and normal processes rather than unusual ones. So the
Yes.
facilitation of money laundering will occur through kind of completely normal usual service provision, but that is in some way facilitating something illicit. So where you draw that line about having suspicions about, for example, a client that you've been working with for a number of years, um, perhaps, or about somebody who is wanting to buy a property, and they've asked you to do the conveyancing, or someone whose books you're keeping. I think identifying specific suspicious activity, suspicious transactions, and potentially the proceeds of crime, or potentially that you're facilitating in some way illicit activity, can be quite difficult to identify and to pinpoint. So I think these things can be quite complex.
Yeah, and I agree. And I think there's also an argument to say that as a professional, a solicitor or accountant, they are anchored more in fact, observable, objective fact than perhaps some would be in terms of instinct or suspicion or concern. And that might be part of their professional development and mindset. But that, I think, offers us a good segue to move on in our discussion and think about how good the fit is between the AML and CTF and wider requirements, and the legal and accountancy sectors. So just to qualify, then clarify that, if we look at banks and we look at financial services, typically quite large organizations, they're able to invest in capability to manage the risk at all lines of defense and to build quite sophisticated responses. How well does that play out into what are very often small, maybe single partner businesses?
Yeah, I think that's really important point. Obviously, the AML regime was designed initially for banks and financial institutions, and there are differences between these sectors, as you say. The kind of the capacity that banks have to have, large compliance audit functions, kind of separate teams, that kind of thing, which legal and accountancy firms are unlikely to have, particularly the kind of the medium to lower sectors. And the processes are different as well. So retail banks process huge numbers of transactions on a daily basis. Transaction monitoring is really important to analyze anomalies and kind of identify unusual transactions and red flags. And as I say, for lawyers and accountants, the facilitation of money laundering kind of occurs in different ways. It's about the services provided rather than illicit funds kind of flowing through them. So I think it is more difficult. I think for smaller firms and sole practitioners, these things are complicated. I think really it will be different for every firm. So I think the important thing is about understanding how the services you provide in your particular firm, your particular context, could facilitate illicit finance. And I think understanding the client and the matter or the service you've been asked to provide or the advice you've been asked to give, whether that's for a long-standing client or a client taken on for a single matter, and understanding the source of their wealth and or the source of their funds involved in a particular matter, and that's becoming much more important, much more of a focus. And this will look very different in different types of legal and accountancy practice. You know, and it can be complicated. Client matters can be complex. So thinking about, you know, it may be that you're providing trust or company services or advising on asset management or, you know, tax management, tax optimization, setting up corporate legal structures, acting in property purchases as conveyancer, providing accountancy or bookkeeping services for small companies. All these things could facilitate illicit finance. So I guess it's about the money laundering regs can't cover all these things specifically. So I guess it's about taking the requirements of the money laundering regulations and adapting them, using them in a way to kind of to help you both be compliant with the regulations, because that's what you can get in trouble for, but also to help you prevent yourself and your firm from being used to enable money laundering.
And we haven't talked too much about that, but there is a fairly large body of evidence to support the idea that accountants and legal practitioners are, in one way or another, directly or indirectly, involved in money laundering. And that's something that we're going to explore in the next In Conversation podcast with a law enforcement professional who's been very much involved in this space. That, of course, introduces this idea of professional enablers, which has been around as a term for many, many years across much of the world. And it's, of course, rooted in the recognition that that service provided by accountants and lawyers can enable organized crime to, in this instance, launder their value. But that causes, I don't know what your experience, Katie, is here, but that can cause quite a strong and emotive response if you raise that with professionals to suggest that maybe their profession is in some way compromised through this.
Yeah, it's always been a contentious term. Part of the problem has been the way it's used in some ways. I think we need to be careful to think about what we're talking about when we're talking about
Yeah.
professional enablers. We are talking about people who enable illicit finance or some other type of criminality. I think the concern was always with the professions was always that it was being used as a kind of a term to that would apply to all of them as a profession. You know, the other term that's used is gatekeepers, which is in a way can be a more useful term in terms of we can say that all lawyers and accountants are gatekeepers because they are in a position to either prevent or enable money laundering. So as a profession, as professions, because of the nature of the work they do, the services they provide, they could be classed as gatekeepers because they are in that position either to prevent or enable money laundering. So professional enablers should be used only as a term to describe people who have enabled money laundering, and
Yeah.
not used as a kind of a term to tar all the professions. So I think that's always been part of what's kind of caused the concern. But there does need to be an understanding that lawyers and accountants and other such professionals can enable money laundering. You know, I think one of the difficulties is it's really hard. We don't know exactly how much money is laundered through these sectors, or how much money laundering is facilitated by these sectors. But what we do know is that on the one hand, we know that many services provided by lawyers and accountants can play a role in transactions or activities
Yeah.
carried out by those who possess criminal proceeds. And we know that there are many cases, many examples of money laundering that have involved types of professional service providers. So this means that there are both opportunities for corrupt professionals to facilitate illicit finance, but it also means there are vulnerabilities for the professions. You know, the vast majority won't be corrupt, won't be bad actors, but these vulnerabilities in the profession, in the kind of systemic nature of the profession, do exist.
Absolutely. So we've established then that, of course, accountants and legal professionals, lawyers, are on the front line in the context of much of financial crime, where they wouldn't want necessarily to be, but the reality is that they are for the reasons that we just talked about. We've thought about the change that's taking place in terms of how those professions are regulated over the last 20 or so years. So there is increased scrutiny and awareness across much of the world. But we've also recognized that there's not necessarily a great fit between 40 recommendations from the Financial Action Task Force, for instance, and the way in which lawyers and accountants operate, very often in small firms. And I think you talked about the importance of adapting established ways of doing things, perhaps within financial services, so that that can be effective in those individual businesses, those smaller businesses. And we've talked arguably about the mindset and the culture within those professional services, which may seem a little different from other businesses that are more used to and more active in managing this risk. Can I, when we move towards the close now, believe it or not, but can I ask about what should we be doing? So if we were talking to the head of, let's say, a relatively small accountancy firm or legal business, recognizing that we do need to be quite perhaps imaginative and creative around how we ensure we meet those minimum requirements. You've already mentioned the importance of thinking about our products and services and how they're vulnerable to money laundering. And I think you've touched on the importance of looking at our customers and where there could be increased risk in there. What else might you say to that individual around how they respond, how they step up to the plate in managing this risk? That's not an easy question, of course.
I think no, that's fine. I think one thing to stress really is the point that the overarching purpose of anti-money laundering regulations, compliance, etc., is or should be to prevent individuals and firms from facilitating money laundering. And this isn't always easy or straightforward. Firms need to do the key things that are required by the money laundering regulations because they can be sanctioned for not doing them. And they've been around for a while. You know, there's plenty of information out there in terms of those requirements. But I think globally, really, we're seeing a move towards aiming for effectiveness in anti-money laundering
Yes.
measures. And there are lots of questions about what effectiveness means, what it looks like, what effective anti-money laundering should be, and how we would measure that we still need to think about. But I think for firms, it's important rather than just thinking about AML as something that you just have to do, tick off, get out the way before you carry on with the business or with the client relationship. It's really, there are lots of kind of decision points in legal and accountancy service provision in that relationship with the client and the transactions you carry out for them or services you provide for them. And so I think it's about understanding what the risks are in your business and about really knowing your customers, their source of funds, the purpose of their transactions, etc. They're trying to move away from, as we've said in other contexts, from a kind of a tick box approach that you need to do, but trying to really understand where the risks lie. And again, I understand that's easier for me to say than to do sometimes. It's not always easy, but there is kind of guidance and advice out there, usually, you know, from professional bodies and supervisors and things to help with that.
Yeah, and I think you make a really important point that ultimately this is about preventing financial crime. And yes, there are certain requirements that we need to comply with that in mind, but we need to keep in focus that this is just simply about stopping crime or stopping our business being used as a conduit for crime. So essentially, it's quite simple. And the danger is that we lose ourselves in the detail and do that to the extent that we lose sight of the fact that this actually is important work that's protecting people around the world, reducing harm by reducing money laundering. So we're coming up to time, but there's a question from Amina. Amina, thank you for your query. I'm not sure we can fully address it, but you ask about upgrades in anti-money laundering guidelines to filter hacks enabled with advancement in technology. So I'm going to suggest that I might speak to that, but you're very welcome to jump in, Katie. But Amina, if I understand you correctly, your question recognizes that there are many different ways that the criminal community will attack businesses, individuals. And when we look at this in the context of regulatory businesses who are subject to regulations that we've been touching upon, then there is an opportunity within those regulations to ensure that customer data, customer activity, and wider data is properly protected. The business is protected from that kind of external threat. I'm not aware that they have specifically changed recently, but there is an ongoing expectation across the world, not just in terms of anti-money laundering, but in terms of data protection, customer protection, and so on, that we take reasonable and proportionate steps to protect our business and our customers from that kind of threat. So, Katie, you're very welcome to add if you like anything to that. But it may be a question, Amina, to take into a different forum. Otherwise, we come into our 30 minutes. We try and keep this to 30 minutes so that it doesn't encroach on people's time for too long. It is, of course, just a flavour of the issues, Katie. We've touched upon the way in which legislation is tightening up. The regulation mirrors that. We're starting to see enforcement taking place, regulators taking the behavior of accountants and lawyers more and more seriously. We're seeing the need for a creative approach to meeting the requirements, but also a cultural and a mindset challenge that's contained within that. And you've talked briefly about how businesses can step up to the plate and start to recognize that changing environment and respond to it. Any final words before we bring this to a close?
I suppose one thing we didn't touch on in any great depth was the changes that are coming around the corner in the UK in relation to the change from the supervision to the FCA, and I know there can be quite and I realise this is just UK specific and it's not just a UK audience, and there are kind of concerns about what that will entail and what that will mean for the profession. So I guess a final point just to say that this is something that is in the process, but it will take a while to come on board. So firms really should be at the moment focusing on what they need to do to get their house in order under the current circumstances, and then that will set them up in a good place going forward for when the changes do eventually take place.
Thank you. And I think that's good advice for any firm wherever operating across the world. Katie, thank you so much for joining me. And for all those that have joined us today from across the world, and for those that will be listening or watching this at a future time through Apple or Spotify or YouTube or through the ICA Members Learning Hub, then thank you also for your time and for your interest. But for the moment, do take care, everyone, and see you soon.